if you put 10% of your portfolio into Bitcoin and wait 100 years, you've got wealth worth $100 million. You've got 100x as much money as you had. So if you want to build wealth, you start by putting a portion of your portfolio into Bitcoin and holding it a long time. If you put 50% of your portfolio, you end up with $500 million worth of wealth instead of 1 million. And if you just convert your $1 million worth of stocks into $1 million worth of Bitcoin and hold it 100 years, the difference between 7 and 14% compounding is 2 times 10, 2 to the 10th. So what that means is you end up with $1 billion worth of wealth instead of $1 million. So you become a billionaire, a legitimate one.
Michael Saylor believes there's one clear-cut, easy way to make $1 billion. Invest your portfolio into Bitcoin and wait 100 years. He's not just talking the talk either. Michael Saylor is now officially up $1 billion in profit on his Bitcoin purchases. However, it didn't take him 100 years, but only 3. In his latest interview, Michael Saylor breaks down the biggest problem with investing and trying to get rich: monetary devaluation and inflation. Essentially, the US dollar loses 7% of its value every single year. Historically, the S&P 500 increases at 7% per year, meaning over 100 years you won't lose any value, but you also won't gain any value. If you kept your money in cash, over 100 years you would lose 99.9% of the value of your wealth, which is insane. Saylor's solution: invest into Bitcoin, which he believes will have an average appreciation of 14% over the next 100 years. Investing $1 million in an asset that appreciates at 14% over 100 years and you will become a billionaire. Make sure to stick around to the end of the video where Saylor reveals why even real estate is a bad investment over 100 years. Also guys, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top on-chain analysis all in a nutshell. Click the first link in the description to join over 20,000 others in becoming a better crypto investor right now. Now here's Saylor on how to make $1 billion.
Commodity and an asset without an issuer. So building that crypto economy on Bitcoin with functionality and layers above it is the path forward.
Wow. Well, thanks so much for the wisdom and idea of the next 100 years. Could you maybe give us a message for especially people who haven't maybe thought through Bitcoin and maybe started to entertain the idea of Bitcoin. So what's the power of Bitcoin to the people?
Yeah, I think the biggest macroeconomic idea is that on average, the US dollar, the world reserve currency, and currencies that are pegged to it or trade close to it at parity have been losing 7% of their economic value every year for 100 years on average. So typically the monetary debasement rate is about 7%.
Wow.
The return or appreciation of a market basket of highly desirable corporate stocks, the S&P index, is about 7% over the same time period. So if you have wealth, if you had $1 million, 100 years from now, if you invested in the S&P index, you'll have an amount of money or amount of wealth worth the same amount, $1 million. It'll look nominally like a lot more. It's going to double every 10 years for 100 years. So it'll look like more, but it'll be worth the same amount because the currency is losing value at the same rate that the portfolio is accelerating.
Yeah.
If you take that same $1 million and you invest it in bonds that are yielding 3.5%, well, then you're going to end up with about $35,000. But you're going to end up with 3% of your wealth. You're going to lose 96 to 97% of your wealth if you're holding a bond portfolio for the 100 years. If you take the $1 million and you hold it in just currency, the dollar, that will be worth $1,000 So you will lose 99.9% of your wealth. It'll be worthless in 100 years. So in terms of investment strategies, if you invest that in highly desirable, perfect real estate property, you might get 1 or 2% better than the S&P index, but you might just get it. And most other strategies that are diversified, mixtures of stocks and bonds, will underperform the 7%. And so you're going to get a blend like 3, 4, 5%. So the best you can do with any conventional strategy, or either conventional equity or conventional property, is to keep up with the monetary inflation rate, which means you can't build wealth. You might be able to maintain wealth. On the other hand, if you take the $1 million and you invest 10% of it in Bitcoin and the other 90% in the S&P index, you can look at Bitcoin and say, well, what's the natural organic appreciation rate of Bitcoin? In my opinion, it should theoretically be about 14% a year versus the 7% a year for the S&P index. Because Bitcoin, it has all of the attributes of an asset that's a security, but it doesn't have the liabilities of companies. There's none of the dilutive effects that hold back a company apply to Bitcoin. The problems with companies are they have a management team, they have employees, they have products, they have competitors, they have regulation, they get taxed, they might screw up, they have execution risk. We could talk for hours about ways that companies don't work, but if you've studied corporate history and you look at 100 companies and you say, how did they screw up? You'll see one of those. And if you looked at a portfolio of commercial real estate or other real estate and said, well, how do you lose money? Well, it gets taxed, it gets regulated, there's the mayor of the city does something to it, it gets rent controlled, there's a war, it gets bombed, it gets decayed, an earthquake hits it, a lightning strike hits it, it rots, insects attack it, your renters don't pay their bills, someone actually blows up a bomb in front of it, the neighborhood goes bad. Lots of ways you lose money in real estate. So Bitcoin is digital property. It's like a big tech monopoly, but without the company liabilities. And it's digital property. So it's like good property, but you can move it anywhere in the world. It's weightless. It's indestructible. You don't have to pay to maintain it. So that's how you get from 7% to 14%. If you put 10% of your portfolio into Bitcoin and wait 100 years, you've got wealth worth $100 million. You've got 100x as much money as you had. So if you want to build wealth, you start by putting a portion of your portfolio into Bitcoin and holding it a long time. If you put 50% of your portfolio, you end up with $500 million worth of wealth instead of 1 million. And if you just convert your $1 million worth of stocks into $1 million worth of Bitcoin and hold it 100 years, the difference between 7 and 14% compounding is 2 times 10, 2 to the 10th. So what that means is you end up with $1 billion worth of wealth instead of $1 million. So you become a billionaire, a legitimate one. So if you're thinking about this entire thing, the first thing is you have to generate cash flow to invest. So you got to work hard at your job as a doctor, whatever you do, your vocation, you have to go and you have to generate cash flow or raise money to invest. You have to raise equity, raise debt, or generate cash. Those are the 3 ways to get the money. Once you have it, the difference between losing 99.9% of your wealth or generating 1,000x more wealth is, do you invest in cash? Do you invest in bonds? Do you invest in diversified equity? Do you make perfect investment decisions, or do you invest in property, or do you invest in Bitcoin? And the range is 1,000x on one end and 99.9% loss on the other end. And then it's just time. You have to let time work. Because the one thing that you can be sure of is time creates chaos and inefficiency. Everybody knows if you look at that house and you don't do anything for 100 years, you can predict the house is going to decay. Everybody knows if you hold $1 million worth of Argentine pesos and wait 100 years, they're going to be worthless. Do you know the peso used to be worth $1? And today, you know, as we're sitting here right now, the exchange rate is 570 pesos to the dollar.
Whoa.
Okay, do you know what the peso was trading at 5 years ago? 30.
30.
Do you know what the peso was trading at 1 year ago? 293.
Whoa.
So you have a very simple example where with the peso, if you waited 23 years, you would have lost 99.8% of your wealth. You see, so time is going to wreck the currencies. Time is going to wreck the companies. How many companies that were around 100 years ago are still around? And how many stocks you could have invested 100 years ago would have made you money? You know? So what is timeless? Like a bunch of land? Like, for example, the middle of Tokyo, the Imperial Palace. If you're the emperor, what do you want? You want to own the most desirable land in the middle of Tokyo. How long do you want to own it? Forever. When are you going to sell it? Never. If you're the King of England, what do you want to own? The most desirable land in London. How long do you want to hold it? Forever. When are you going to sell it? Never. Is it more valuable today than 100 years ago? Yes. You see? So what you want to own is the most valuable property in cyberspace. Bitcoin is the most valuable property in cyberspace. How long do you want to hold it? Forever. How much of it do you want to buy? Well, go back, do a little thought experiment. Go back in time 100 years and take all your family's assets and ask yourself how much property in the middle of Tokyo should you have bought? None? Some? As much as you could. Right? And generally the answer is as much as you could.
Yeah.
As much of New York or London or Tokyo. Right? Because, and here's the key point, politicians can make more currency. They will make 7 to 14% more every year forever. The AI bots, they can make more music and more products and more services. Factories can make more products, right? Humanity is going to be able to make more products, more services, more bonds, more securities, more equity, more currency. What is it that they cannot make more of? They can't make more imperial palaces in the middle of Tokyo. There's just one. They can't make more Buckingham palaces. They can't make more beachfront property at the #1 resort in your country. So find the most desirable property that the robot can't make any more of, that the AI in cyberspace can't make any more of, and that the next governor or president can't make any more of. Buy that. You know, 1 acre in Miami Beach was $10,000 in 1923. And today, it is $10 million. Okay, so the politicians would tell you that inflation's only 2%. But if you're a mathematician, you know that land went up by a factor of 1,000, and the real inflation rate is 7.5%. Why is it that real estate in Palm Beach or Miami Beach went up by a factor of 1,000? And the answer is because that the robot can't make more of, Henry Ford can't make more of, John D. Rockefeller can't make more of. No amount of science, no amount of computer chips, Apple, Google, Facebook, they can't make more of. The central bank can't print more of it. So find the things that are absolute, scarce, And by the way, desirable, right? Like, you don't want to own the top of the mountain in the Himalayas or the Arctic. You don't want 100 miles in the Arctic. That's not desirable. You want the middle of Paris, the middle of Tokyo, the middle of London, the middle of New York, if you lived in the 20th or the 19th century. But if you live in the 21st century, what's the middle of cyberspace? The most desirable real estate, the most desirable property, the most scarce thing in cyberspace is Bitcoin. You want to own cyber Manhattan, and you want to acquire as much as you can, but you want to be able to hold it forever, right? As long as you can. If I took you back 40 years and I said, I'll give you a loan, a 30-year mortgage to buy a city block in Tokyo, should you have taken that deal?
Yeah.
Yeah.
100%.
You would be rich right now.
Yeah.
You would be rich right now. If you get long-term financing that is not going to liquidate you at a very reasonable interest rate, then you would want to buy I'll sell you all of Tokyo. Do you want it? Now I'll say one more thing. If I show up and I said to the emperor, or if I said to the king of England, I hear there might be a plague in London and a lot of people might die, so I'll buy your palace from you and then you can go move on to a Pacific island. Would you trade your palace in the middle of London or Tokyo for an island where there isn't going to be a plague? No. But the point is, everybody will come every year and say, oh, there might be a problem. There might be a quantum attack on Bitcoin. Buy my shitcoin. There might be this. Buy my altcoin. What if the government bans it? Buy my altcoin. Do this, do that. Why don't you trade it for gold? Why don't you trade it for this? Everybody wants your Bitcoin, and they're going to try to scare you into selling it or trading it for something which is inferior. And at the end of the day, the royal family of England has kept their real estate for hundreds, if not thousands of years. They haven't traded it. The emperor's not trading. The royal families in the UAE or in the Middle East, they're not trading. You have to be a royal to own beachfront property in Emirates. They don't trade it, because what they realize is you're going to want that in 100 years. So my view is, take the long view. You're going to want it in 100 years. Don't let people scare you and spook you out of your position. Everybody in the world wants your Bitcoin. Don't give it to them, right? They're going to prey on your insecurities, and they're going to tell you, no, you ought to put your money in the bank and take, my currency or my whatever. Don't do it. Keep the Bitcoin and then take the long view. And that's my investment advice.
As we wrap up this insightful video, it's clear that Michael Saylor's approach to wealth accumulation through Bitcoin is not just ambitious, but also a direct challenge to traditional investment strategies. His billion-dollar success in just 3 years as opposed to the projected century exemplifies the potential of cryptocurrency investments in an era of consistent monetary devaluation and inflation. But Saylor's insights don't stop at Bitcoin. He also shed light on why traditional strongholds like real estate may not be the most lucrative investments over a 100-year period. His analysis is a wake-up call to investors and financial enthusiasts alike, urging a re-evaluation of long-held investment beliefs. Remember, if you're keen on staying ahead in this dynamic world of cryptocurrency and Bitcoin, don't forget to subscribe to my daily 5-minute crypto newsletter. Join over 20,000 others who are refining their crypto investment strategies with our expert predictions, breaking news, and top on-chain analysis. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.